Thanks, everyone. Me again. But this time I'm going to be talking to you about the really exciting Global Payments Innovation Playbook that we've just presented to you on your desk after lunch. So in collaboration with PYMNTS.com, we're really excited to present you with this playbook. It's an extensive report providing an overview of actionable insights around the globe, having scanned the globe for innovation for payments trends. So today, Sarah and I will walk you around the globe and discuss innovations and developments that we've seen in a number of regions, and then what this means for us in Australia. You'll see a few major themes cropping up, and we've already talked about a number of them today. But the consistent themes that you'll hear are, first of all, mobile first. There are currently 5 billion mobile phone connections around the world, and people are wanting to live their lives through their phones. And financial services and the way that people interact with their financial services institution is no different, and payments is there. The second one is real-time payments. Whilst there's no global consensus on how to deliver real-time payments, it's an element that needs to be available in any real payments ecosystem. And as well as fast payments, cross-border fast payments are fastly becoming more relevant. And then the last thing is around the importance of technology and how this technology can enable innovation, and also how legacy systems can hold it back. So first of all, we'll head to the UK. And I'm kind of going to be repeating a lot of what Adrian has said already, but I'll just do a quick recheck on what we've learnt in the UK. So 10 years ago, they launched their real payment system, and at the day one, 13 banks launched. This has now expanded to 21 banks, and along with faster payments came increased fraud. And how this was managed in the UK in the first instance was around new and multi-factor authentication modes. They could have done with a bit more vigilance around fraud detection on day one. And this is one of the main learnings that we have taken in Australia in rolling out MPP, and particularly at Cuscal in rolling out our MPP service offering. The other thing that we learnt in Australia from the UK experience was ensuring that the messaging standards enabled the right level of data with the message. We then moved to Europe. Sorry, before I move on, I should say more recently the innovation we're seeing in the UK is in the open banking space, and we're going to hear much more about that tomorrow. So then we moved to Europe. Europe has progressed to the fast payments and also really embraced the cross-border payments, fast payments. And this was no simple task, with 8,000 different European banks and 28 different regulatory and compliance regimes. Putting this together was no easy feat. So the scheme that was put together to enable fast payments cross-border was not so much of a technology project, more of a legal project or legal scheme that put together the rules that enabled those payments to be made cross-border. So last year, the SEPA Instant Credit Transfer Scheme was launched, in which you can make cross-border fast payments in the European region, and you can make those payments up to denominations of 15,000 euros, and those payments will be made within 10 seconds. As the global economy becomes more interconnected and the need to send money cross-border becomes more of a demand-driven piece, this is likely to lead to much more jurisdictions and regions rolling out cross-border payment ecosystems. And it's very easy to see how locally a use case could easily sit with having cross-border fast payments in the Australia and New Zealand regions. And this is something at Cuscal that we've already turned our minds to. Next, I'll hand you over to Sarah, who'll take you through the rest of this journey.
Thanks, Bianca. So I'm going to start by talking about what's happened in the US. And especially there, what we like looking at is the use of virtual assistants and voice payments and their work in driving client experience. So it really all began with the launch of the iPhone 4S back in 2011 and Siri I don't know if you remember how exciting it was at the time that you could push a button and ask a question and you got the answers back. And then when we moved forward to 2014, Amazon launched Alexa. And she could do everything Siri could do, but she could do more and she could do it better. And Alexa is now the blueprint for what a virtual assistant ecosystem could look like. It currently powers more than 50 products and it has over 300,000 skills. And people are using it. So last year in the US, 36% of Americans used some sort of virtual assistant in their everyday lives. And so it's not surprising that it's now starting to find its way into mobile banking applications. Bank of America this year launched their assistant, Erica. And Erica combines artificial intelligence, predictive analysis, and voice recognition. So it allows you to do all your banking on your mobile using your voice. So if we look to the future of where client experience is heading, the benchmarks are increasingly being set by those outside of our own industry. And if we look at Amazon, Google, Apple, Microsoft, etc., these are the companies that are setting the new benchmark for what good client experience looks like in the digital space. So I'm going to move on and talk about China. And what's really interesting about China is that they have created an entire payments ecosystem through social media platforms rather than via a bank. And this huge platform began back in 2004 with the launch of Alipay. And Alipay started really just as an escrow service to support Alibaba's e-commerce website. And the services just grew from there. And to give you an indication of the size of Alipay today, they currently have 870 million users and they're targeting 3 billion in the next 3 years. And they invest heavily in technology. They spend over $8 billion per year in capital expenditure, and they complete an entirely full technology upgrade every 3 to 4 years. So banks with their existing legacy systems and infrastructure, would really struggle to compete with that. The other Chinese player that we're all familiar with is WeChat, and they're managed by Tencent. They currently have over 1 billion users. And like Alipay, their offering really just began as a complement to their existing services through a social media platform. But it's the speed at which these organisations have captured the market that's truly impressive. The Chinese mobile payments market has gone from just under $1 trillion in 2014 to $4.3 trillion in 2018. But if we look at the context of how this has happened, they had a fairly captive market, so the Chinese consumers were largely underbanked and they had very limited options. They could go to the People's Bank of China or another state-based financial institution. So Alipay and Tencent were effectively the white knights. They offered easy access, a great client experience, and all through your mobile phone. In China, the mobile's at the core, and the banking services are really a complement to that. And that's in quite a direct comparison to the US and Australia, where your bank is at the core, and your mobile is just a service that you can access, that allows you to access that. And I suppose the other thing that worked in China's favour when you think of innovation is that they're relatively unregulated. So a lack of rules enables them to really experiment with technology. And we think that there'll continue to be some really exciting things come out of the space in China. So moving on to India, and there's some parallels here. So it's another country which had a fairly large number of unbanked consumers. But where India is just fascinating is they took unbanked consumers, they managed to get them identified and set up with digital banking, but without the use of branch networks. And the way that they did that was so different. So in September 2016, the Indian government demonetised all 500 and 1,000 rupee notes. That effectively rendered 86% of the banknotes in circulation useless overnight. Their aim in doing that was to drive adoption of digital payments, but also to crack down on corruption and bring 60% of the country's workforce into the tax fold. And it worked. So the result was that they had a huge spike in online payments. One of the main beneficiaries of that was actually Alibaba, because they own Paytm, which was a big player in India. The number of Paytm users increased 105% in 11 months and reached 250 million users. And Indian point-of-sale terminals also increased by 80% in the 12 months following demonetisation. So how did they do this? Well, there was 3 key factors that really helped them to achieve the penetration that they did in that time. Firstly, the mobile phone. So 78% of Indians were already using their mobile phone to access the internet. Secondly, and this was touched on earlier today, they leveraged the national identity system that was already in place in India. So 90% of the country's population was already fully identified using biometric data in that system, making it the largest biometric database in the world. And then thirdly, they developed a united payments interface that allowed them to do interbank transfers. And that was regulated by the Reserve Bank of India. So as they touched on earlier, there were some security concerns, probably not surprisingly, if you identify customers using your national identity framework. And so last year, the step was made to actually discontinue all transactions that went via that framework. But the learnings and the foundations were laid. And since that time, they've continued to see growth in their payments through the mobile channel. And you've now got players like Google Pay actively playing in that market. So whilst India is still a heavily cash-dependent society, there's no way they would have got that step change in digital payments had they not taken some of the measures that they did. And we think India is the place to watch because it's got the data, it's got the technology and the innovation, and it's got the regulation to make sure that there are some really exciting things that we'll see come out of there. So I'm not going to touch too much on what we've done in Australia because I know we've heard about it just before this session. But I think what is reassuring is to see how we've taken the learnings of what has happened in these other countries and applied it here locally. So we have the RBA's fast settlement service, so we get true 24/7 real-time processing. NPP was set up with the preemptive measures to reduce fraud off the back of the learnings of the UK. And we've got the larger data limit, again, based off learnings of what's happened overseas, that gives the richer information for recipients. So it gives us confidence that we've taken learnings and applied them well, and we've done it with speed, and we think that we can continue to build on that and remain at the forefront of payment solutions. So what does it all mean for us? We've seen that cross-border real-time payments are already happening in Europe. We've seen that our customer experience is increasingly being set by those outside of our own industry. And that you don't have to be a bank to be extremely successful in capturing consumers' banking.